Hello everyone, this is Ryan with Numbers Up Finance, and today I just want to do a very quick video for natural gas analysis. Wednesday, February 6, 2019. In the past we've done these videos before. We've covered a news standpoint and a technical standpoint. Today I just want to keep it strictly technical with natural gas. I feel like the technicals are pretty straightforward on it. Here we're looking at /NG. This is the ticker symbol for the future of natural gas. With natural gas, there are many ETFs you can trade for it. Falling under XLU, which is the utility sector of the market, performs independently from the market, as many may know. It does not correlate with how SPX and SPY perform. It is completely on its own. And with that being said, given that the market's in an extremely volatile position, should you choose to stay away from the indexes at this time, natural gas is a sector that you could trade and have success with. So as I mentioned, we're just going to keep it strictly technical today, be very quick with it. And the way I see natural gas playing out right now, again, this is the future for it, I see two possible scenarios happening over the next week or so, both of which prefer a lawning situation with a pop-up. Now, over time, this market's completely oversupplied. In the long term, it's not something that I would favor for a very long-term investment, obviously. It's something that's setting up for a really nice swing trade right now. And again, if we look at the futures, we're currently trading at 267, and we're actually getting halted by what appears to be an incoming support at around 263. So yesterday, for the first time in a while, we had a green day on the futures, and again, this decline was halted by hitting a support, and now we appear to be consolidating a bit. And usually when we hit these support levels, there are a lot you can make on natural gas. A lot of support, a lot of resistance. There's frequent reactions, but there are some points that have way more than others. And the line 263 is one that has some reactions, but there are lines with many more. I mean, this is the 10-year one-day chart on natural gas, and you can see at this 263 line right here, there are quite a bit of reactions at it. And oftentimes we will react at this point and bounce up for a little rally. However, there's also a support line below this, 251, that has many reaction points as well. So I see two scenarios playing out. Either A, we are at our support right now. We reacted yesterday and we're consolidating and we're going to fall over the next week or so with a bounce. Or B, we reacted at this point, we're going to consolidate and we're going to actually break the support and push to the 250 support. Now, I actually prefer scenario B because 250 as a technical support level is so much stronger than 264, pardon me. And every time we get to this 250 point over the past couple of years, we very, very rarely go through it. I mean, the last time we were below 250 on natural gas was 2016, summer, as you can see right here. And before, we actually used this as a support multiple times. You can see 1, 2, 3, 4, about 5 tags on it. We actually use it as a resistance as well, tagging it twice prior to it. So 250 is just such a strong support level, and should we reach this level, we would feel very confident entering a long position on it. 264, on the other hand, as a support level, is still a pretty good long entrance because, even if it doesn't play out, you could simply enter the long now and scale in up until we hit 250. You can just increase your position as we approach that level because we can speak with a lot of certainty that we're not going to crack that 250 line. Now, of course, is it possible? Absolutely. And in which case you have to be very careful because the natural gas market can be very risky. But should our first scenario play out, we still have some room to grow. So another reason why the scenario might play out right now is, yes, we're at a strong technical support level, but we also have a bullish divergence potentially forming on our momentum indicator. Again, price consistently falling, but our momentum indicator is appearing to be making higher highs. So now I have two lines drawn here. This is scenario 1 where we play off of 264 where we're at right now, and this is scenario 2 where we play off of a much stronger 250 support level. Again, I'd prefer scenario B where we actually break through this line and we come and tag this line down here. We hold our higher highs on momentum, and should we get to 250 on the natural gas futures and hold a bullish divergence, we are looking at a really, really nice setup. In terms of longing it right now, you could get in early on, and like I said, you could scale into it. Personally, I would wait on it because the bullish divergence hasn't played out yet. Once I see the bullish divergence start to play out, then I would enter a trade. we're probably going to see a lot of consolidation over the next couple days at this technical support level. And then that's either going to be followed by an impulsive bounce up or a nice breakdown to 250, which would be ideal, like I said. Regardless, watch to see these bullish divergences play out. We actually are seeing a divergence play out on the RSI chart right now. This leads me to believe that we're actually going to see the bounce at 264, where we're at right now. Again, though, take that with a grain of salt. I think we're going to be consolidating the next couple days, and if we can follow that consolidation with a push down to 250, that would be very ideal for longing it. And as well, if we just go to the 4-hour chart, we can see that over the past couple weeks or so, we've actually been holding a strong divergence on the chart. We've had higher highs going for a while, and I mean, I have a line drawn here. This actually extends pretty significant, despite a falling price. So we're definitely posed for a move up. We have room to fall, of course, like I said. But if you want to enter a long position now, prepare for the bounce up. Set a target around, there are many targets you can set, of course. Perhaps your 20-day moving EMA can be a good target. That's crossing nicely with a $3 resistance point. That could be your first target, and maybe set your second target at your 200 daily SMA. Again, those numbers are all open for, subjectivity. But if you want to enter the position now and take a long on it and scale into the trade, should it start to push to 250, you might be good with that scenario, because even if it doesn't win right here, we're going to push down to 250, and we're going to get an impulsive bounce back after that, far past this 264 point. So very good position to be long natural gas right now. The momentum's playing out in our favor. The technical levels are playing out in our favor. We have some nice targets set up on it. Again, this is ticker symbol /NG. This is about all I wanted to cover today. I just wanted to take a look at a potential setup for something exclusive from the indexes, and that pretty much does it. So this has been Ryan with Numbers Up Finance. Thank you for watching, and keep your numbers up.